Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the markets. As always, please don't use these for trading purposes. They're for information only. Review of what we're doing, what we're looking at. See here, starting with the weekly chart of the S&P 500. Goes back to about 2021, but it shows about 5 years trading here. You can see the breakdown that we had shown in the last update, that things were kind of rolling over as a little sideways, but it did break down. Some said because of the war, the price of oil, all that kind of thing, but it was a very expensive market looking for an excuse. And that's what happened. I highlighted right around the 6,200 level as support. And from where we're sitting today, it came pretty close to that, about 100 points away. From that, went down, tested, and now it's up here testing the breakdown. So we'll see where it happens from there. So you're still in a downtrend, but there's a very strong move with the ceasefire, I guess, for 2 weeks. Very strong move up to try to regain the upward momentum. But right now, I'd still say we're in a downtrend, just retesting the breakdown of a level, and that is something that we see a lot of. We come down here to daily chart. You see, we were highlighting that the last 6 months it was kind of a sideways action that was going on, and we did break down. We got down below the 200-day moving average, but since the ceasefire thing was announced, we've hopped right back up. So now we're again at that level where we're testing the breakdown. So it's unsure that we've gained a new uptrend here. We're more testing old levels, and we'll see what happens. And I imagine if that ceasefire does not hold up, that we're going to go back down and test lower. But we may have, at least for the time being, found a bottom on the market. There, if we come down and look in a little more detail, this is the 2-hour chart, shows us about the last 6 months trading. And you can see here the nice downtrend that got going. And then came up, kind of broke out of it, was sort of staying sideways, but then had this big gap up here. Let's look at some of the items in underneath the market. If we go to the percentage of the S&P 500 that's in an uptrend, you could see before the breakdown, it was, and I've been talking about this in prior videos, that it wasn't at the 80% level or 90% that you'd see in big uptrends. It was just moving its way down. Here it's in the 60s. As we sold off, it came into the 30s and now has bounced back nicely, and it's still mid 50s. So it's not, this isn't really a strong bull market territory. You're still getting just lifted by a few boats, but it's still a good sign that the market may have turned. Next one down is the advanced decline line that had been selling off there, and you can see here that that was bouncing up. I was telling you, it was trying to find the bottom at that support level that we had shown. And then finally, the bottom one here, this is the VIX, the volatility index, shows the price that people are paying for protective puts, options contracts that will protect the value of their portfolio. And that's falling, and that's something that you'd want to see in a market that's rallying. However, it's still up at 20, which is rather elevated for a market that's just fine. So I think are still some nerves out there. If we look at interest rates here, same thing as in every video. For just years, we've just been staying in this 4% range, 4.3 right now. You can just see it's just been back and forth here for years. Certainly, see what happens when you get a new Fed chairman coming in here. But for right now, nothing to see there in the Treasury market, just a bunch of sideways. We look at our economic data. For the U.S., GDP growth rate, the last one quite low, was at 0.5%, though the one before that was not bad at 4.4. Non-farm payrolls, we had a negative number there, and the last one, 178,000. So that's pretty good. It's picking up there. I also like to look here at retail sales. We had a negative number, and now the last reading was slightly positive. So that's good. Overall, I'd say the economic numbers are okay. Still, once again, not showing any sign of a recession or anything like that. We come over here to valuation. We've been saying for a long time that this number here is the S&P being priced at 20 times earnings. We are way above that, and have for some time needed for it to come back to a little reality. But it looks like just had its small dip for a minute here and is popping right back to those old highs. So the market remains very overvalued, and that's certainly a concern in the long run. Earnings are good, as you can see down here. S&P earnings are growing, but they're just not catching up to the price of the market, so it is quite expensive. Also, underneath the market, if we look at the ratio of consumer discretionary stocks to consumer staple stocks, it's gone to flat. I mean, that had really sold off, telling us that there was going to be a sell-off coming, and we had positioned correctly for that. I'm not sure that's bottomed yet. Let's see, the next one, the same ratio of technology to utility stocks. Also not good. Technology has been in a bit of a sell-off here. Biotech over healthcare, that's real strong there. And in fact, during that sell-off, that didn't even adjust. So I'm not sure how telling that indicator is at the moment. And then finally, the bottom one, the ratio of hotels to utility stocks, that's improving a little bit here as the market's improving as well. So that might be helpful. Overall, what we're seeing was we had a market that was long going sideways, broke down, came down, kind of tested some levels that we were looking at here. I'll go to the weekly chart, shows it a little better. Testing some levels that we were looking at for support, found the support there and is rallying back. We'll see what happens from here. It's definitely a key point to see if the bulls can keep this going for everybody. But at the moment, we're still positioned defensively, and depending on what happens over this weekend and stuff, if need be, we'll start putting more risk back on the table as things seem to be healing up. So let's see, I'm going to put out here this is our contact information. If you have any questions, if you'd like to hear about what we're doing in portfolios for clients or have any questions for the next video update, please don't hesitate to reach out. Otherwise, hope this was helpful, and we'll see you at the next update. Thank you.